Welcome to Nestology. We are your hosts. I'm Jessica.
And I'm Shelley.
And today we have a special guest. We have Lois with us to talk about financial planning. Lois, welcome.
Welcome.
Hello.
Hey, well, you have an interesting story, so I would love for you to tell us a little bit about who you are and what got you into this business.
Yeah, so my name is Lois Kim. I actually used to be a band director, so got my degrees in music ed and wanted to be a band teacher ever since like sixth grade. Did that, jumped through some immigration hurdles, but was very happy to do that. Fast forward to 2020, and I got married and then had to go through a divorce in 2021 from domestic violence. And then that started my new chapter because of the immigration stuff. It was tied to my teaching job. So it kind of took me out of teaching. And so I had to look for a new job. And so I was very lost. And so I got into finance somehow, some way. And that was really a pivotal moment for me because I just wasn't very well versed in finances. And even when I was a teacher, I was like, my money goes into TRS, like the cloud somewhere, and I'll get it later. And so I didn't know. I was ignorant. So now being in finance, it's really given me purpose and a passion under my butt to help not only women, but people just to understand basic concepts with money that I wish I knew 10 years ago, so that when something devastating happens in life, like a divorce or a loss of a loved one or whatever it may be, that we're prepared and that it doesn't dip into our everyday life. So now I get to help people and families and business owners. And more specifically, I love getting to help my nonprofits with their funding. So yeah, that's what I get to do.
Oh, that's awesome. And well, I guess we can also add in, we have talked about it before, how we had that event, what did we call it? The Women, Wealth, Wine, and Wells.
A lot of
Wills.
W's.
Yes,
Wills
all the W's.
and wine.
And wisdom. We had
And
wisdom
wisdom.
too. But Lois was one of our experts that came. And yeah, we love that you're so passionate about
Oh,
educating
it was fabulous. Yes.
and helping other people. And thank you for being willing to share your story, because I know that's a hard one, but so many people are in that same boat and have experienced that death or divorce of their spouse, and then they're really lost. So I love that you have that passion behind educating your clients. So question for you, when should somebody really start financial planning? Is this something that they need to wait till they have a certain amount of assets and money in their bank account before they talk to an advisor?
There are people that prefer to work with certain people. Like my poor friends recently was like, we got fired by our financial advisor. And I was like, why? And she was like, 'cause they don't make enough money for him. So,
What? Your financial planner can fire you?
yeah, it goes both ways. And so I don't think it's like a right or wrong. It's just, everybody has preferences. And if someone wants to work with people in like a higher echelon of money, great. I do want to let the public know most people don't charge for like just a consultation. All of our meetings are free. The only thing it will cost you is time. So I would say shop around for advisors, and because there's a lot of us running around, but it's really about who you can trust with your money and who you're comfortable being vulnerable with about your finances. And I would start as early as you can. Like, if you got kids that are like making money at 16, I think it could benefit them to have that conversation, even if it's just like basic budgeting, like how much should I be saving? Where should I be saving? If I have enough money to invest, where should I start? And I just wish that was more apparent at a younger age, because the more I learn about wealth, the more I'm learning it's a discipline. It's not like one day you wake up and you got oodles of cash in your bank account.
Absolutely.
Right? It's like little steps that lead to the big money. And so if you can get that discipline going when they're like 16, 18, and then they just get into a habit of saving 20% of their income, they're going to be freaking rich later.
Yeah, but you're right. I mean, that is the part of it, is finding the right person, because not everybody will take on a 16-year-old who is not making very much money yet. So
You will. I love that though about you.
I know that you love that. So I guess that kind of leads into another question I had, is how does someone go about finding the right advisor for them? Like, what questions should they ask? Where should they find the right person? Because it's a big trust going into a relationship like that, a professional relationship, when that person's advising you on what to do with your money?
Yeah, that's kind of a hard question to answer just because everyone's so different with their needs. But really, truly, I think most people have great intuition. So, like, if you sit down with someone for the first time and you're just like feeling icky about them, or like, you just don't feel like they're being fully transparent, or, you can ask them, like, how do you get paid for this? Or, just asking those questions that involve your money. And I would just base it off of your gut and their answers. If they can't provide the answers for you that you're asking for, in a timely manner. I think it's fine for someone to ask me something. And if I say, hey, I don't know the answer to that, but I'll get back to you, I think that's fine. But if you give them a lot of time and then they don't have any appropriate answers, then I would probably move on to the next. But unfortunately, I feel like it's going to take a little bit of time to figure out the right people. And obviously, like you guys know in your industry, a lot of word of mouth is how we do a lot of our business. So once you like and trust someone, it's a lot easier to help them with their money.
Yeah, that does make a big difference. I know that's the same for us when we have a good relationship and people trust us, then they're willing to share. But you have to be willing to share and be open and ask questions. So if you're intimidated by your financial advisor, that's not going to work.
Well, yeah, because I would say typically, people, well, like you, Lois, myself, and the finance mortgage side, right? It's like I find that people are a little scared and intimidated, and they feel like they have to over explain, like why their credit score is this or why they don't have these assets and things like that. And really, all we're looking for is like, hey, just let us know let's talk. It's not like there's a grading system. But
no judgment.
There's no judgment is what yeah, exactly. That's the word I'm looking for. But it's like, when you talk about financial planning, it does sound kind of scary. And it sounds like, how do you even get started? But the fact that you mentioned, yeah, I'd love to work with a 16-year-old and get them started in that is really cool, So thank you. Thank you for what you're doing to help our community and our people.
Of course. I think there's a lot of things tied to money. So, like, we have our own emotional attachment to it. We just read a book about myths about money, and I saw it in a client of mine recently. His mom got burned on the life insurance side and did not invest in any other places. So whoever sold her on that a long, long time ago did not do their due diligence in investing into different pockets. My friend was like, hey, like my mom told me not to do this because this is what happened to her. And I was like, okay, but like, did she invest into a Roth IRA? Did she use her 401k? Did she use her health savings account? Like, I'm asking all these questions. He's like, well, no, and no, and no. But we have this like emotional attachment that comes down even generationally with money that we just don't know that we're acting out. And so I've caught that about myself too, but it was just interesting to see how other people make decisions about their money. Like he's like, my mom said this, so I'm going to go with that as opposed to a financial professional, right? And so that's just the psychology behind money.
We see that a lot too. Mom and dad said this, or I shouldn't buy a house like this, and just because of their one bad experience with something. So
exactly.
But you mentioned the other day when we were talking, you have noticed with with Gen Z, the younger generation coming in has been a lot more open and willing to ask questions. Is that correct?
Yeah, I do think even I'm in my 30s now, and I would say 10 years ago when I was in my 20s, no one really asked about what to do with their money. Like it was very hush hush. Culturally, we don't talk about it. That's why I don't love working with the Korean market because when I approach Korean parents, they're like, my kid's grown, they're on their own, they'll figure it out. And so it's very different from how I would operate. It's like, man, if I had a kid, I'm like, okay, we're going to start getting you credit when you're like, this age, and I'll add you as an authorized user. And like, we're going to start saving, X amount of money. So it's different for everybody. And I've just come to realize like, that's just part of it. But this new generation, I feel like they're more vulnerable in many aspects, whether that's emotionally or financially. And so my sisters are now 19 and 25, and we have little talks about money all the time. And I'll ask them like, hey, how's your credit card usage going? Like that's become like a
family dinner, talk about our
because I was in that group of people that used it incorrectly, and then it's just like a spiral. And back in 2019, the average woman in the US had over $80,000 in credit card debt. So yeah, So I'm mortified and scarred. And so there's some emotional psychology behind there, is like
Yeah.
why I check in on my sisters. But it's like, like, how are you using it? Are you paying it off every single month? Just making sure they're doing the right things.
People talk bad about Gen Z sometimes, and I love hearing that, though, that they are, and I see it too, the asking questions, they're looking for info. I don't know if it's just that they are growing up in an age where technology gives them so much and they
Right.
want to learn. But yeah, I love that they're so open and they're not embarrassed to ask questions or to say they don't understand something. So
Right.
good job, Gen Z.
Yes. Woo, keep it going.
Absolutely.
So, what should a basic plan look like for someone like when you are working with, especially, yeah, younger people who are getting into that place where they want to start investing? What things do you think they should have in place first? Like certain amount in savings? Is it then life insurance or retirement accounts?
Yeah, let's like pretend we're talking to someone who's like 18 and like just getting, a little bit of a paycheck every single month. I like to start with like the budgeting rule. It's not a hard rule, but a soft, roundabout way to look at things. But the 50-30-20, 50% needs, 30% wants, and 20% towards savings/retirement, I think
Love
is a
that.
good, yeah, it's a good place to start if you don't know anything, right? As we talk to more older clients, I'll say, hey, you're a grown person. I don't care what you do with majority of your money, right?
That's right. Don't tell me how
Yeah.
much to spend on my trips.
Yes, Shelley, take as many trips and drink as much wine as you want. But
But I
the
save,
caveat,
but I also save.
yes, and that's the way it should be. So with little ones, I say little ones, young adults, I would probably start there. And I think it's so important to know how much money is coming in, how much is going out. And then, if you have any discretionary, that's when you need to start like having an emergency fund, about having at least 3 months of expenses before you start investments. Because the worst thing that could happen is I tell somebody, hey, start putting into a Roth IRA, and then they don't have an emergency savings, but their car breaks down. So now they're going to have to pull out on that investment. So it's doing you a disservice.
Yeah.
Right. So I would definitely start there. But man, I've been able to help several people now in the 4 years. And I would say most adults, I would say 8 out of 10 adults don't know what they're doing. So I hope that brings some solace to people that are listening that don't know what they're doing, because it's okay.
Yeah.
You're not alone.
You're not alone. And, you talked about the younger ones. Do you talk about, I mean, we had just mentioned like credit cards and things like that, like credit. Do you talk about that when you talk to the younger kids, or like, is that something that I guess you're just assuming the parents talk to them? But I know my kids personally, when they both turned 16, I added them as an authorized user onto one of my credit cards. They didn't even have the credit card. They weren't going to use it. It was just literally to start building, their credit. So when they were ready to leave, they could go and apply for a lease and get it in their name.
I think that's a beautiful gift that you can give a child, because some companies will even let you put them on there way before 16. So there's different like age restrictions for different companies. But I think that's a great gift to give them when they're 18 and say, hey, buy your own car now. Without telling them that they have the ability to do so until the right moment. But I do like talking about that mainly because they hear credit cards like from other people, like they see it on TV. They're like, oh, is credit really bad? And then they'll start getting like mail in the letter once they apply from all these different companies saying like, you got approved for $1,000. And so like my sister literally was like, hey, I got mail that said I have $1,000. What does that mean? And
oh my goodness.
But very valid question, right? It's like when you're 18 and the people start bombarding you with mail that says you have all this money, you're like, do I have this money? That's how they get you.
And they just start saying yes. And they just start, agreeing and applying. And they're thinking, oh, this is what I have to respond to these people, right?
Correct. So I do think it's important. A lot of kids will bring that up. I speak at a lot of high schools locally, and that's probably one of the number one questions that come up. They're like, is credit really bad? And, where do I get my first credit card? And, things like that.
Well, on the mortgage side of things, just, for our listeners, authorized user accounts, I can exclude from debt to income ratio calculations. So it's not going to impact you if you are an authorized user on your parents' accounts.
That is really good to know.
Yeah.
Little tidbit.
Perfect. So life insurance, do you want to talk to us a little bit about life insurance and how that can be utilized?
Yeah, I just had a meeting this morning with one of the partners here at work. As I have gone into this business a little bit longer now, I used to think everybody needed life insurance, and now I've changed my thoughts.
Ooh,
Um,
really? Do tell.
yeah, I would say not everybody needs the death benefit.
Okay.
So, okay, because there are people that are like, hey, I have this buku money that's going to pay for all of that. It's fine. Everything's fine. I'm like, okay, that's great. But I think people are just missing out on utilizing life insurance when you're still living. I think that's such a untouched territory. Thanks to TikTok and stuff now, there are more things that are going viral. It's a double-edged sword because like yes, there's awareness to it now, but kind of bad because all the information's not always correct. So because I have to
Misinformation on social media.
What?
I
Never heard of
know.
such a thing.
Because people will be like, hey, I heard you can use life insurance to like borrow money against it and be your own bank. And I'm like, yes, that's true. And they're like, doesn't sound like it's true, but it is. And
You
so,
can do it. I love that policy. Yeah, we're okay. I get so excited talking about that whole life insurance policy and the cash value and the things that you could do with it. I've had clients that have actually used that to buy houses.
yes, yeah. I mean, I might have already told you this. My mentor has like multiple rental properties, and each one he'll use the cash in his life insurance to put the down payment on the
Mm-hmm.
house. We'll make a profit and then keep replenishing his life insurance and just keep recycling that money.
It's a
So,
great creative way to utilize that.
Be your own bank.
Yep.
yeah, I mean, I looked at the loan interest right now. It's like 5.3, and
Mm.
depending on how much of a lump sum you want to pull out, like could be a pretty good deal. And then depending on which company you have it with, if they pay you out in dividends, usually that covers the interest or more. So it's like you're almost borrowing free money. So,
Absolutely.
but yeah, there's just so many ways to go about it. Some people use it as a buffer asset because if you use whole life, like Shelly mentioned, it's guaranteed. And we've kind of talked about this earlier, but not many things in life are guaranteed,
Mm-hmm.
especially with the economics and, just life happening. And so we tell people to utilize it as a buffer so that you and I can't predict what the world's going to look like or the market's going to look like when we decide to retire or want to take vacations. And so it's a safety net, but also a tool for my wealthy clients who make over the income threshold to contribute to a Roth IRA. That's
Mm-hmm.
also another great option for tax-free withdrawals. So yeah, there's just so many ways to go about it. You can use it for college funding for kids, for weddings, retirement, what have you, because no one's going to ask you questions, which is, I think, the best part.
Yes.
So when you talk about insurance, life insurance, and you were saying that you're not sure everybody needs it, but from this perspective, this is a different type of policy, right? So the traditional life insurance policy, is that what you were referring to? Like that's just you get a policy, it's a term policy, you pass away, and that money goes to your heirs.
Kind of, but even the whole life has a death benefit portion,
Right.
right?
Oh yeah. Mm-hmm.
But some wealthy people just don't care about the death benefit. They're just using it for the cash. If you don't pay it back, no one's going to come after you. It's creditor protected.
Exactly. Yep.
So that's what I mean by the death benefit is like, sure, like you can say you don't need it. I do think it's the most cost efficient way to take care of business after you pass, because as opposed to having to pay a mortgage through whatever other assets, like life insurance is just the cheapest way possible. But in terms of the death benefit, like you can tell me you don't need the death benefit, but I still think everybody could benefit from the other benefits.
I think from what I've seen in my experience, the death benefit being most important in the like 30s, 40s, when I see people who have a young family, they have kids, they have a mortgage. I too often I've seen it, and my husband, when he was in, because he worked in finance, and when he was working in a bank, he had clients come in that lost a spouse, had to sell the house because they couldn't afford it, had to move across the country to go live with family. That just the disruption, if you're already losing a spouse, especially at a young age when you have little ones, there's just so much trauma already associated with that. But to have to sell your home, pick up and move, and add all of that to what you're going through, I mean, it's a devastating thing.
It really is. And fortunately, I have not had to give a death claim yet. However, I did have a lady call, and one of their family members had recently passed, and they had a New York Life policy. And she said that this isn't me, this is on the back end, but they took care of the back end so well in getting that death benefit check to them and easing that process. I can only imagine the mental relief of getting, let's say like a $500,000 check
Mm-hmm.
when you're grieving your loved one and you're trying to figure out how to pay for everything because now their income is gone. Just there's so many numbers happening in your head of like, how
Yeah.
am I going to pay for food? How am I going to pay for the mortgage? Just
Can you
all
imagine
these
the
things.
thought of having, well, if you have a stay-at-home mom has to now go get a job or get a second job or do something to make extra money to try to keep your kids in their house. I mean, I cannot imagine the stress that you have on top of losing a spouse and a parent. So,
Absolutely. Can I have a little sidebar on
yeah.
that? Because, we're talking about a situation that sometimes comes up in my side of things where, you've got a married couple, for example, and maybe one spouse doesn't work and then the other spouse is like, well, they don't need to be on the loan.
Oh, yeah.
So I do like to go through the scenarios with clients with regards to that. Sometimes there is a very good, valid reason to not have a spouse on the loan, but 99% of the time, I mean, it doesn't matter if they don't have a job. It's nice to have them on the loan because in that case, to where if something were to happen to that income producing spouse,
Mm-hmm.
then the other person's not trying to qualify. They can't even call and talk to the mortgage company,
Yeah.
right? So I always do try to encourage people, if at all possible, to have both spouses on a mortgage loan for that reason.
Yeah.
You don't want to have to move on top of,
Yeah. Can you
a
imagine the
death.
mortgage company calls you and says, hey, by the
You
way, you
better
got to qualify, you got to apply for a mortgage now.
Yeah, it's
That
not your mortgage. So yeah, you got to requalify. So that's not always the
that
best
would be a fun
situation.
phone call to have when you lose your spouse. You got to apply for a mortgage now.
Yeah, no, that's
Mm.
not what they want to do at that point in time.
That relates to our industry because people will be like, oh, I don't need life insurance on my stay-at-home wife. And I'm like, do you know how much it costs for childcare nowadays? Like,
Yeah,
who else do you trust with your kid? You
Mm-hmm.
know what I mean? Like, I get that she's not bringing in like physical income, but man, to replace her, it's going to cost you a pretty penny. Just like
absolutely.
the things that she's providing for your family that it
Yeah.
would normally cost someone else, like just driving around, feeding your kids, just the safety of your child. Like, what is the price on that? So I think that's a great point. I always try to, because I have a lot of males that will call and say, like, oh, my wife doesn't need any. And I'm like, she probably does.
Mm-hmm, mm-hmm.
So,
Well,
Absolutely.
yeah, it's when my husband and I did ours, that's what we looked at. We were like, we want to make sure that it would cover everything so that all of our focus for the surviving spouse would just be the emotional care of the kids, have the mortgage paid off, and be able to sit comfortably where we could just take time to help the kids and emotionally deal with everything and not have to have financial stress. So it's a really important one. And it all kind of comes on at once with, you see couples who get married, buy the house, start having kids, everything just happens so quickly. And you go from no responsibilities to a whole lot of responsibilities all at once.
man, I commend any couples that take that next step and actually put it into action because even my boyfriend, shout out to my boyfriend who's probably not going to listen to this, but
Shout out.
but my point is he's 41 and I'm talking about all these things with him like, hey, do you have a will or a trust? Like you're going to buy a house, like you got two little ones, like, and men, not all men, I think some men think that they're just going to live forever. And
Mhm.
that's just not the reality. And so, if you guys have any advice, like I'm all ears, but it's
Oh
so
my
hard
goodness.
for some
Do we
men
need to
to
yell
like.
at him right now? Because we can yell at him. You can
We
play
can.
this part of it.
I'll be like, listen to this part right here. But it's so true. Like I'm just using him as an example, but
Yep.
I run across a lot of people that are like, A, I don't want to talk about it, or B, I'll be fine. I'm like, but you're not.
I'm going to stick my head in the sand.
Yeah, that doesn't work because, you mentioned earlier, what is the only thing that's guaranteed? Death, right? I mean, we gotta plan for the future. We really, really do. There's no guarantee. But it's
Yeah. And now I'm involved, right? So I'm like, okay, here you are, like being the breadwinner, providing. One day you can't work. I mean, he literally threw out his back like a year ago and was immobile. And you would think that would like light up a fire under someone, but no. So it's like in my head, I'm like, if I'm thinking long term with you, and like you're telling me I don't have to work, you're providing, but like one day if you hurt yourself again and you can't provide, that's to me not a full extension of love. You know what I mean?
Oh my gosh, I totally understand that because okay, me, I'll just little, about dating questions have changed with my age. And now I'm like, okay, so do you have a long-term care policy? Like, who's going to take care of you down
Yes.
the road? Because, hey, my age group is getting close to, 60. So, like, okay, if they've never heard of
You're
it,
going to be the
I'm
sugar
like,
mama.
oh, hell no. I'm sorry. Uh, I should say I'm sorry. No, I don't prefer that.
You're not going to be a sugar mama. They need to take care of themselves.
Oh my goodness. But yeah, if I'm going to be the one, like, I need to know these things. But if somebody that's, around my age and they don't even know what a long-term care policy is or, whole life insurance or just those things, like I get a little concerned.
I would be too. I tell people probably like when you're age 40 plus is when you should start really getting serious about retirement, long-term care, just all those things. If you can start sooner, even better. But yeah, I think that's a good time to start looking.
Like we no longer ask the questions like, what is your favorite food? What are your hobbies? I'm like, no, long-term care policy? Check. I mean, like,
do you fly coach or first class?
Oh, we're not gonna go there. It depends. Are we going to Europe or is it, like
she's a high maintenance traveler.
I am.
She's like, what's your credit score?
What is your credit score? I have literally asked. I've actually wanted to pull people's credit before. I'm like, I'm sorry, we cannot go on a date unless I know what your credit score is. Do you have any judgments? Do you have any liens? Do you have
Yeah. How much do you have in time? How much do you have in retirement, other assets, investments?
Yes, what exactly is your retirement plan? And when they're like, yeah, I'm just going to keep on working. Okay, no, bye-bye.
Yeah. No, for real. I get that.
Yeah, sorry, we got off on a little tangent there. Okay, so I do have a question about, some of these things. When you're going through, like say an initial consultation, is there a checklist or something of questions that you ask or that people like, do they fill something out to kind of give you an idea? I mean, I don't know. I'm saying like kind of like a loan app, I guess is what I'm getting at. Like, do you have that kind of thing that like maybe we could share that people could really check and see, do I have these things? Yeah, like to prepare for a consult.
Yes, thank you for asking. So I have a system and process where I'll send a pre-meeting email and I have it in front of me, but it'll say stuff like list your specific financial goals, concerns. What is your number one financial priority or concern? What have you done thus far to address this? Is there anything about your current finances that you would change? Are you expecting a change in the near future? And then if they're comfortable, they can list out their assets and their investments and their retirement accounts with the values of all of them. So that just kind of kickstarts our initial meeting. And then in the initial meeting, I have all the topics that we can cover at the top. And so it'll go from like budgeting, education planning, health insurance, estate planning, business planning, retirement planning, all the way down to long-term care, life insurance, and property and casualty. And so that's kind of all the topics that we can cover. And then I'll have little asterisks for people that I refer out to. But the reason I include things like estate planning and property and casualty is because estate planning goes hand in hand with what we're doing. But also like property and casualty, you save a lot of money shopping around for those as opposed to keeping it at one place. So if we can save you money there, they could open up some more investment money or maybe money for long-term care. So that's at the very top of the sheet. And they'll tell me what they want to learn about. So all I'm doing is checking off like, okay, they want to learn about retirement. They want to have my referral for estate planning, for long-term care. And then that's what our initial meeting is about, is really just kind of them telling me, this is what I want to know about. This is what I want to learn about. This is most concerning for me. And then in our next follow-up meetings is where we kind of deep dive into what their different buckets and options may be.
Excellent. Okay. I love that. We can share that.
In the show notes and on our socials, we'll share information to, connect our listeners to you. So if they want to set up a consult or anything, they can find how to do that.
Yeah. And I know you offered me this, Lois, and I don't know if you want me sharing this, but I'm going to. So, you had offered to review my long-term care policy, right? Because honestly, there's so many different vehicles. I do mortgages, so people just assume I know accounting, I know finance, like all I'm like, they're really all very, very different, right? So even I want my stuff reviewed
Mhm.
because when you initially start this, it could have been 15, 20 years ago. And you had offered to look, for example, at my long-term care policy, which I will get that over to you so we can talk about it. But I mean, to me, that's really, really helpful because I mean, I have somebody that is not reviewing my policy with me. And if you are in that situation and you've got some documents, you might, want to talk to somebody who can really go over and review it. I had kind of some expectations with financial planners in my past that I just thought they would reach out to me once a year to kind of go over things. And do you know, they don't do that.
No.
And I don't know
Hey,
if that's a normal thing, but I did kind of expect to be, reached out to and like, hey, let's review this. Has anything changed? Do you want to, make any adjustments? And also kind of going over these policies, like, really, what does this even mean? Some of them I don't even know really truly what the vehicle is. I know that sounds insane, but at the time it sounded great. So I signed up for it. But then I was like, I don't even know what it is now. I couldn't even tell you.
no, that's so true. Like my best friend called me the other day. She was trying to explain life insurance to me, and I was like, I know it's been a minute, Mel, but our annual review is coming up. It's
So
like, I
you do
promise.
offer that.
Yeah. Most people should offer that in our business only because you guys know, like a year, a lot can happen. You
Mhm.
know,
Hmm.
you can have a baby, you can buy a house, you can get divorced, you can lose a loved one, you can move towns. I mean, there's too many things that go on that could happen in a year to where it's kind of necessary. And then, eventually when life, settles down and it's a little bit calmer, maybe you don't have to talk every single year. But I think the
At
yearly is,
least offer it, right? I mean, even I do that on the mortgage side, So at the beginning of every year, I send out an email that's like, hey, you know what? Let's touch base. It's time for an annual mortgage review. Let's just review everything. Now, granted, not everybody takes me up on that, but it's there and it's available. And I think people should. Because, like you said,
yeah.
you just don't know what is impacting you.
I will
And
say people answer my call when New York Life rolled out a new life insurance product that lowered the premiums. They'll respond to those calls.
oh,
If I'm like, hey, I can save you money on your life insurance, they're like, oh, okay. Most of the times I get ignored, so it's okay.
I get it.
It's funny that you're talking about this because, well, I told you I had life insurance policy set up for my kiddos after they were born, which is a great thing to do. But the person that we went with it, I haven't heard from them since we set it up. We pay every month, we do our thing. But they called last month and they said, hey, time to schedule our annual review of your accounts. And I was like, it's been 12 years. I think you've missed a few of these. So
It's a new
my
policy,
husband
Jessica. It's a new policy.
my husband was like, they're trying to sell us something now. That's the vibe he got because it didn't feel like they cared after 12 years. So it is nice when there's someone who is constantly in contact, looking out for you and trying to help you out. So,
That is hilarious. Quick sidebar, I will say children's policies are even more advantageous. I started thinking about this. If you know people that have diabetes or cancer that are
mhm.
genetic, if you can get a kid approved when I think they have to be like 14 days old to get them life
Mhm.
insurance. But if that's genetically in the family and they get approved when they're a baby, even if they unfortunately develop cancer or diabetes later, it won't affect them. So I think that's a great PSA to tell people because if you
Oh.
have people in your family that that's kind of inherent, you can
Mhm.
do that on a child and that could save them a lot later down the road. I'm actually talking to a client today who his daughters won't be able to get approved now in their 20s, but he got them something when they were younger. So
Yeah. Yeah, we did it for that purpose, and for the investment purpose, but also, yes, for that in case there was anything that came up later, any kind of diagnosis. So it's a really cheap policy and a good investment. So happy we did that.
That's
that's
awesome. I
awesome.
didn't even know there
Very
was a thing
proactive.
when my kids were born. My kids are a little older than yours.
Yes.
Remember, I'm more seasoned, Jessica, than you are.
Shelly's old.
We call it seasoned. I'm more seasoned.
Call you
Oh,
wise, just
Oh, thank
wise.
you. Thank
she's
you.
wise.
Thank you. Thank you. Okay.
Well, any other tips or advice you have for us?
Really, you can just narrow all of it down to just ask for help. I think
Yes.
um, I just did a workshop with some women in Flower Mound yesterday. Oh, yesterday feels like forever ago, but it was goal planning and goal setting for getting ready for 2025. And we're talking about our values and our mission statement. And I think I landed on I want to help people by connecting with them and connecting them to others so that their life is easier and so that they feel that they're truly never alone. And so
I love that.
I just feel like my job is just like, I want to help people because in reality, we have a lot more in common than not. And if we just take the time to sit down and chat and ask questions, who knows? Someone might know something more than you and you could learn and maybe make your life easier. So
I love that.
Yeah.
Lois, what I know, from when we met a while back, that you definitely live that. You are a true heart of gold. You're a connector. You like to connect people and you like to connect with people. I remember the first time you came to my office and we were
me
like
too.
having a heart to heart, like
We were there for a
talking
while.
talking about our past. And you're legit. Like, it's real, and you love people and you love helping, and it's obvious. So
Yes.
thank you.
You.
We
Thank
appreciate you. Well, thank you guys for joining us. And as I mentioned, we will share Lois's information in the show notes and on our social media channels. You can find us at Nestology Podcast on Facebook and Instagram.
Thank you for joining us, where we hope you make the best of your nest.
Bye.
Bye.